The U.S.'s military actions in Venezuela, home to the world's largest petroleum reserves, are unlikely to lower gasoline prices for consumers, but industry analysts say they could lead to billions of dollars flowing to American oil companies that donated to Trump's election. On January 3rd, the U.S. military launched a strike in the South American country that led to the capture of Venezuelan President Nicolas Maduro. Trump and top cabinet officials have been clear that they are also seizing control of Venezuela's oil industry. Among the oil refinery owners who could benefit from this move is billionaire Trump donor Paul Singer, founder of an investment management company that is buying Citgo Petroleum, a refining firm owned by Venezuela's state oil company. Citgo has refineries in Texas and Louisiana that are already geared to process the kind of heavy crude oil produced by Venezuela. Singer donated about $8 million to Trump's election campaign and $1 million to his inaugural committee. Also positioned to potentially cash in are ConocoPhillips, ExxonMobil, and Chevron, which also gave millions to Trump's political campaign. The first two companies have been seeking a combined $32 billion in reparations from Venezuela for seizing their oil drilling infrastructure in the country in 2007, after the nationalization of the country's oil resources. Chevron could also benefit because it is the only U.S. oil company still drilling in Venezuela. The company has a refinery on the U.S. Gulf Coast that is designed to handle heavy Venezuelan crude oil. But the oil industry appears to be wary of re-entering and investing in a politically unstable country. Also, increasing output from the country's neglected oil infrastructure will likely take many years and more than $100 billion, which oil companies are unlikely to invest themselves. Will U.S. gasoline consumers benefit? The short answer is no, said Robert Kaufman, an expert on the oil and gas industry and professor at Boston University. It's a world oil market, and Venezuela produces only 1% of that supply. So whether the U.S. controls that supply or Russia, it doesn't matter. There is one world price for oil based on global supply and demand, and that's what determines the price. Refiners do stand to profit if the U.S. gives free oil to companies like Citgo to process and then sell. The oil companies can make a fortune if they refine free crude oil into motor gasoline, Kaufman said. To learn more about how massive oil companies stand to gain from U.S. actions in Venezuela, visit news.oilandgaswatch.org.